For thousands of years, humans have searched for the best way to protect and grow their wealth. Kings stored gold. Families bought land. Businesses built properties. And today, one question continues to divide investors: gold or real estate? Which one can make you richer? For some people, gold represents security, a physical asset that has survived wars, economic crises, and inflation. For others, real estate represents true wealth, a powerful asset that can generate income, increase in value, and create financial freedom. But the truth is more complicated, because gold and real estate are not the same type of investment. One is mainly designed to protect wealth. The other has the potential to actively build wealth. Welcome back to Wealth Pilot. Today, we're comparing two of the world's most famous assets, gold and real estate. We'll explore their history, advantages, risks, and discover which one may be the better choice for long-term investors. Gold has been considered valuable for thousands of years. Ancient civilizations used it as money, a symbol of power, and a way to preserve wealth. Unlike currencies that can lose purchasing power over time, gold has maintained its importance across generations. During periods of inflation, economic uncertainty, and financial crises, many investors turn to gold because it is limited in supply and recognized around the world. Gold does not depend on a company, a government, or a tenant. Its value comes from global trust and the belief that it can preserve purchasing power over time. But gold also has an important limitation. It does not create income. A gold bar sitting in a safe does not generate monthly cash flow. Its value mainly depends on whether its market price increases. And this is where real estate enters the conversation. For thousands of investors, real estate has become one of the most powerful tools for building long-term wealth. Unlike gold, property can do something unique. It can generate income while increasing in value. Imagine owning an apartment building, a rental house, or a commercial property. Every month, tenants pay rent, creating a steady stream of income. At the same time, if the property value rises over the years, your wealth grows through appreciation. This creates a powerful combination: income today, growth tomorrow. That is why many investors consider real estate one of the strongest wealth-building assets. But real estate also comes with challenges. Unlike gold, which can be stored easily, property requires management and responsibility. You need more capital to get started. There are maintenance costs, taxes, repairs, and the possibility of having no tenants for a period of time. Location also plays a critical role. A property in a growing area can become extremely valuable, while a property in a declining area may struggle. So the real question is not simply which asset increases in price. The question is, which asset better matches your financial goals? To answer that, we need to compare them directly. First, let's look at wealth protection. When it comes to protecting wealth, gold has a strong advantage. Throughout history, gold has survived economic crises, currency problems, and periods of uncertainty. When people lose confidence in financial systems, many investors choose gold as a safe haven asset. Real estate can also protect wealth, but it depends more on economic conditions, interest rates, and location. A great property in the right area can become extremely valuable, but a poor investment decision can limit its potential. For pure wealth preservation, gold has a very strong historical record. However, protecting wealth is only one part of investing. The next question is, can the asset create income? And this is where real estate has a clear advantage. A rental property can generate monthly cash flow. An investor can earn income while waiting for the property to increase in value. Gold, on the other hand, does not pay rent or dividends. A gold coin or gold bar simply holds its value and waits for the market price to change. For investors looking for regular income, real estate offers opportunities that gold cannot. But income is not the only factor. Growth potential also matters. Both gold and real estate can increase in value, but they grow in different ways. Gold often performs strongly during inflation, uncertainty, and financial instability. Real estate grows through factors such as population growth, economic development, and increasing demand for land and housing. Over long periods, many investors have built significant wealth through real estate because it combines appreciation with income generation. However, accessibility is another important difference. Gold is easier to buy, sell, and transport. An investor can purchase a small amount of gold and convert it into cash relatively easily. Real estate is different. Buying and selling property requires more time, paperwork, and usually a much larger investment. But that difficulty can also encourage long-term thinking and prevent emotional decisions. The lesson is clear. Gold and real estate are not enemies. They serve different purposes. Gold is often used to preserve wealth. Real estate is often used to create wealth. So, which one should you choose? The answer depends on your personal financial goals. If your priority is protecting the wealth you already have, gold may have an important place in your strategy. It is portable, globally recognized, and does not require management. But if your goal is creating long-term wealth and generating income, real estate may provide greater opportunities. A rental property can create cash flow, increase in value, and potentially allow investors to use financing to grow their portfolio. However, it requires more knowledge, more responsibility, and careful decision-making. The smartest investors understand that there is rarely one perfect asset. Many successful investors choose diversification. They may hold some gold for protection and own real estate or other productive assets for growth. Because successful investing is not about finding one magical investment. It is about building a strategy that fits your goals, your risk tolerance, and your future. Gold can help protect what you have. Real estate can help build what you want. So, gold or real estate? The truth is, neither one is automatically better. Gold has preserved wealth for thousands of years. Real estate has created generations of wealthy investors. If you want stability and protection, gold may be a valuable part of your portfolio. If you want income and long-term growth, real estate may be the stronger option. But the greatest investment you can make is improving your financial knowledge and making smarter decisions. Because wealth is not created by one perfect choice. It is created through patience, discipline, and consistent action over time. If you enjoyed this video and want to learn more about money, investing, and building wealth, subscribe to Wealth Pilot for more valuable content. Thanks for watching. See you in the next breakdown.